I just celebrated my 39th birthday in KL, and these are some footages. You know, time with family is always the most important thing, and I also wish that for you. Today, I'll be sharing with you my net worth at the age of 39, working as a YouTuber, and more importantly also as a prudent financial advisor in Singapore. Hopefully, this sharing can inspire some of you, and without further ado, let's dive on to things. Hi guys, welcome back. Let's start with the first item, which is quite possibly the most boring one, CPF. This is a quick snapshot of what is inside my CPF account right now. In previous years, I haven't been contributing too much. That's why, if you see at the age of 39, this is actually not a lot. Many of you guys who have been working full-time definitely have way more than what I have inside. I've been contributing a little bit more over the last few years because pay has already stepped up. I've also realized through this audit that I haven't contributed for this year, so it's a good reminder for myself also. Right there, you can see SA total holdings 134,000, OA 23,000 plus. So in total, the figures are about 158,000. Let's exclude Medisave from this net worth, even though, just to share with you, a myth is that when you pass away, Medisave is not given to family. That's actually not true. Your entire CPF account becomes your estate, so don't get that wrong. But in terms of calculating net worth, let's assume I might need it in future for medical needs, so we'll only consider OA and SA as part of net worth. And at the bottom, you can also see a deduction, correct? This is actually from Integrated Shield Plan. And just in case you are also looking for tax relief ideas, do note, anytime there's a deduction from your Medisave will fall below the basic healthcare sum BHS, and it could be an opportunity for you to top up all the way to the BHS level again and get tax relief. So with that out, let's move on to the second item, property. Right now, this is my home, and I'm valuing this at $1.3 million. This is actually still a very conservative valuation already. A figure that I've used actually 2 years ago. Right now, if someone offers 1.3, I'll definitely turn it down. The current loans I have for this home is actually at 500,000. Coming up in a subsequent video, I'll be sharing with you why I've actually chosen a particular fixed rate for this property itself. So if you're thinking about mortgages, do smash on subscribe. I'll be releasing my findings and my thought processes in a subsequent video on mortgage packages. So if this place is valued at $1.3 million and the loan is $500,000, that means between me and my wife, the net worth is $800,000. My half will be $400,000. In a previous at the age of 37, I've actually shared that back then I owned this place as well as the HDB flat, and this was valued at 1.3 million then also. As I've said, this value is definitely higher now, and the 400,000 is actually attributed to my HDB flat. It was rented out back then, but I've actually chose to sell it at the end of 2022 because I believe that property cycles are close to peak, if not already at the peak. Something I've shared in this video. The question usually is, why sell property, correct? This is an important quote by Benjamin Graham. The intelligent investor is a realist who sells to optimists and buys from pessimists. I'll share a bit more on what I've been buying, which is in the pessimist space. It has not yielded returns yet, but I'm very patient on it. For the HDB flat, when I sold it off, I actually got a price that is way above valuation. Ohmyhome actually helped me with that sale. I've actually shared before in this previous video and gave a rare glimpse into my first home. I have two things to recommend to you today. The first is Homer AI. Play with it and you can actually claim your $5 NTUC voucher with my referral links. Within it, you can actually find out how much your home is actually worth. And when I imputed my previous home, I actually found a valuation of $434,000 with a click of a button. Not just that, you can actually learn how much your neighbors have sold their home for. In this screenshot, you can actually see transaction prices in a glance. And at the bottom is actually my previous unit that sold at $437,000. I've actually covered away the address, but if you're curious, sign up with Homer AI today and you can actually see the details over there. With Homer AI, you can get to know your neighbor's selling price and keep track of all the recent transaction trends around your location. You can also use the calculators to find out your cash proceeds and also learn about your affordability if you're looking to sell and buy a new home. As always, look my referral links below and get your sign up vouchers today. With that, let's move on to the third item for today, which is SRS balances. Right now, my entire SRS is invested into Singapore small cap stocks. This is a quick list from my September statement. And as you can see, I've actually covered away the quantities so that we do not put too much focus on what exactly the breakdown is. Actually, if you've been a fan of the channel, you can work backwards and guess what are the holdings. There are some in commodities and there are some in REITs. And in a big picture term, these sectors have yet to perform for 2023. This value right now of 257,000 also includes this year's contribution already. And there's a few thousand spare in my SRS account that can be deployed. So the total value of my SRS, let's round it conservatively, is about $260,000. Let's move on to the fourth item, which is stocks in cash. This is a quick snapshot for my CDP account. You would see that the total value is around $430,000. In itself, I think the dividends could be close to 20,000 already. And I can share with you that I've actually been adding to companies that I've done research on before, which includes Delphi, which includes Mapletree Industrial Trust, and Keppel DC REIT. Because of these purchases, total REIT allocation has increased to close to 40% already. And depending on when you check the stock market price, it may not look too good. I've actually shared before, I've used funds for my HDB sale to funnel towards purchases like this. That's why this component has swelled up as compared to the previous video I've done. With that, I'd like to bring out an important quote. You make most of your money in a bear market. Right now, REITs are in a bear market. You just don't realize it at the time. If you're also a REIT investor, be very patient. And let's move on to the fifth item, which is Singapore Savings Bonds allocations. Right now, in my CDB account, I actually see these two and they are worth $19,000 in total. This audit is actually quite good. It gives me a reminder I could possibly recycle this more urgently than the one in my wife's name, which has a higher interest rate even. So right now, Singapore Savings Bonds for a 10-year average is about 3.3% already. These two are high 2% only. So maybe it's time for me to do some recycling work, and that's why it's always good to keep track of your finances and your total asset base to look for areas to optimize. Let's move on to the sixth item for today, which is custodian value in trading accounts. I have a couple of them in Tiger, in Weibo, and in Moomoo. I've cashed out along the way on trading positions to prepare for more home loan repayments. Transferring monies in and out from these trading platforms are pretty easy, and that's why I've actually partnered with some of them as sponsors before. If you're looking for Singapore stocks, Moomoo is quite possibly one of the best around. If you're looking for US stocks, and if you want to do regular investments, use my referral links below for their rewards also. Total value is about 150,000 across all three platforms. With that, let's move to the seventh item for today, which is actually cash balances. Cash balances right now are pretty thin. I was looking at all the accounts. The total value is only about $20,000. This really is for emergency needs already, which goes to show my new income coming in. I've been buying Singapore stocks, I've been paying down loans, home loan repayment, term equity loan repayment, and also annuity plan loan repayment. I'll touch on that towards the end also. Right now, a lot of these floating costs are close to 5% per annum already. So whatever you see on the treasury bill is actually still lesser than what is being charged on the floating SIBOR costs. Of course, right now, everything is moving towards SORA. And if you're not familiar, leave your questions below in the comment sections. I'll try to help address it. I've been actively deploying them all over places and they're not really sitting in the bank account. It's actually been like that, if I'm not wrong, for the last 1 year because I've been very aggressively investing. And it ties into a story that I shared with a friend very recently. You know this term war chest cash? War chest cash means that if there's a good opportunity, you should use this money and deploy. And when it's good opportunity, that is actually when there is cheap valuation. Right now, REITs have been in a bear market for a few years. Asia stocks like China, they've also been in a bear market for a few years. Deploying war chest cash need not always be when there's a crash, like during the COVID crash in 2020. Such crashes could happen once in every 5-10 years. So war chest cash, in my opinion, should actually be deployed already once there's a bear market. As always, don't be afraid to use it. That is monies that you have prepared to fight Mr. Market. And if you agree, help me smash the like button to reinforce that concept. And it also helps the algorithm reach a bigger audience so that we can together share more proper financial planning steps and wealth building steps right here in Singapore. With that, let's move on to item number 8, which is actually my holdings in Syfe portfolios. I've actually quite a few of them, and the first one is actually this REIT Plus portfolio. This was actually started when I did a review of this portfolio. You will see that there's a gain over there, but do note this includes some bonus units that they've paid me, which I've earned through affiliate links. Naturally, if the REIT market is not doing too well, this should by right also be in a negative zone. That also swells up my total REIT exposure. But within Syfe, I have a bigger allocation towards, as you can guess, Chinese equities. This is something I shared in a previous video, links over here. And what is inside in Syfe right now are 3 portfolios, 2 of which I've covered extensively on this channel, where I dollar cost average gradually, and 1 which is a bit more opportunistic into CQQQ. Total value in Syfe portfolios is $110,000. Quite obviously, this has been a drag to the entire net worth, right? Let's not delve on the negative sides too much. And let's move on to item number 9, which is crypto assets. Just in case you were hoping for something bullish, actually no, yet another bearish asset class. Crypto, as we know, right now is in winter. Of course, recently there seemed to be some movement because of breakthroughs in ETF listings for Bitcoin. But my major allocations are actually, as you can see, in Ethereum. I previously built up 30 Ethereum coins, and actually in the last 1 year, I've been inching that amounts up right now to about 33.44 Ethereum coins. I hope to probably build up 40 and leave it as legacy for my 2 sons. It's quite a different approach, because the common question, as what we can see from this article in Stack Homes, is that many of us are comfortable leaving property for our children. We believe property prices will stay strong, which is very likely true, but also argue that properties are not movable. Just in case next time they live in Korea, US, Australia, whatever we bumped into a Singapore property asset, they may not appreciate also. So my idea for legacy is leaving something that could exponentially grow in value, that could one day be something that they use 20 or 30 years down the road. And my personal opinion, not financial advice, is crypto assets. The total value right now is about $51,000 worth, which equates to about $70,000. You know, when crypto was hot, everybody say blockchain is the future. But right now, there's no mention of it already. It's okay, I'm very patient with it, and that's why I've still been holding it in my core wallet. Which leads to item number 10, annuity plan value. This was highly popular in 2021, where loan rates were very low. The idea worked back then, simply because nobody would have forecasted such a rapid, unprecedented interest rate spike. The key difference on how I advise clients was I always made sure that they could afford that after we've gone through an entire financial analysis. I've actually suggested for many of them to start paying down those loans. I walk the talk, and for myself, I'm serving notice to make full redemption, and that will come in on 30th November 2023. The notice period for this loan is 3 months, and the amount I need to clear is $144,000. We've prepared that already in an account. It's not mixing with the $20,000 free cash that I've previously shared just now. Hence, the total value of this asset class for my half works out to be $100,000. So let's list out the items that I've gone through today that formulates the entire asset base. The only loan I carry is in mortgage, and we're very netted that off against the property value. So let's run through a list. Firstly, CPF OA plus SA, $158,000. Property, net value, $400,000. SRS, $260,000. Stocks in cash, $430,000. Singapore savings bonds, $19,000. Custodian trading account value, $150,000. Cash float, $20,000. Syfe portfolio, $110,000. Crypto assets, $70,000. Annuity plans, $100,000, which brings the total net worth that I see at age of 39 to be $1.72 million. But am I financially free? You know, property cannot be consumed. It's home, correct? It's a liability. So if we exclude that, and if we were to factor my core expenses to be about $6,000, 25 times annual of $6,000 per month, that still means that I'm still not technically financially free yet. Just close enough, not too big a worry. But as always, I'm enjoying my work. I'm not retiring anytime soon. I'm still very focused on showing my sons how to have a good work ethic and build something that they can be proud of at the end of the day. So different people have different perspectives, but hopefully I've shared something that can inspire you in your journey also. Thank you for watching right to the very end, and with that, I would like to introduce you to this video which I've just recently shared on my total expenses right now. If you're curious about it, check that out and I'll see you there too. Take care as always. Goodbye.